Now, the Colombo Stock Exchange has seen a turbulent week, beginning with a massive shock as circuit breakers were tripped on reopening day, prompting a full-day closure. To discuss this week's stock market and what we are to look forward to, I've invited to our studios Director of the Colombo Stock Exchange and Chairman of Asia Securities Dumith Fernando. A warm welcome. You went back to business on Monday this week after a lapse of 7 weeks from the 20th of March. But did we send the right signal out to the foreigners? What are the signs now?
Yeah. So I think what happened on the first trading day, which was a circuit breaker being triggered very quickly and the market shutting down for the rest of the day, I think that was really an anomaly. I think there were some restrictions put on the circuit breakers, which were not done with the intention of closing it down. But some of the unintended consequences of that was that the sudden rush of selling in the pre-open led to the market falling right away. But I think what's more important to recognize is that fall came on a volume of only 25 million rupees. So really it's negligible. The more interesting story is what happened in the first 2 days, and where we lost in aggregate about 13% of the market. Now, it's really interesting. There's one other market who had been closed for a few days and reopened. That was the Philippines back in March. Interestingly, on their first day of trading after a closure, they were down 24% at one point and bounced back to end up at 13%. Now, interestingly, that market is also up 21% from that day. So we've seen a positive trend since that very first day, and we can talk about that. But I think the very first day's turbulence, I think, was probably a little overblown.
But what are the signs we're sending to foreign investors right now? March 20th, we halted trading, and then it took almost 7 weeks for us to reopen market. But elsewhere in the world, markets continue. I think we discussed about this. Market should have remained open for trading. And now when we go back 38 seconds on the first day, we send a very bad signal to foreign investors. But as stockbrokers, what was it? What kind of a intervention did you make with the regulator too?
So we made representations clearly. I think you know, it was not just foreign investors, but local investors also who might have wanted the market open, particularly during the COVID troubles. There were people who had lost their income, but perhaps they wanted to liquidate some of their stock holdings to make some money. But in some ways, I'm looking at this as something that's happened in the past. We did make representations on the basis of the fact that markets should be continuously operating, that halting markets could potentially worsen any sell-off rather than make prices better. And also the fact that you do create some pent-up selling demand. So that's probably what we saw in the first 2 days.
But could this have been avoidable?
Well,
avoided rather.
I think, in fairness, unlike other countries, we were under a strict curfew. In other countries where there were lockdowns and markets remained open, there was no curfew. So unless the stock exchange is designated an essential service, I think it would have been quite challenging for us to run some of the operational aspects of it. I
think the big question now is what the outlook is for our stocks, our markets, our capital market. Where do we go from here? Because we may have sent a message of uncertainty, but where do we go from here? Yeah, so if you look at where the stock market is now, and if you go back to Tuesday when the markets bottomed, you were seeing very, very cheap valuations. We were already quite a cheap market before March 20th. But with what happened on Monday and Tuesday, we realized that some of these stocks were extremely cheap. And one of the things we did was we actually analyzed about a dozen liquid stocks and looked at what the absolute worst case fundamental value for those could be. And since the day we put that out, we've seen markets actually moving up. So what has happened is there has been some foreign selling, but at the same time we've seen local institutions, a few local institutions coming in and buying up very large chunks of companies. We've seen very active retail participation. So what we've seen also is that a lot of new account holders are coming into the market. They're opening new stock trading accounts to get in, and they do see this as an opportunity
to buy cheap. And that's exactly what I would tell the public and investors. This is going to be a once-in-a-lifetime valuation opportunity on the basis that what we know about the COVID management in the country is going to remain as is. Our COVID numbers have been relatively good compared to other countries. Our mortality rates have been pretty good, and we're seeing industry starting to come back online.
You did mention about new investors coming on board, but we've been talking about the lack of education on
Yes.
investments, on stocks. Sri Lanka lags in that area, but how can we look at creating market awareness, and also about stockbrokers themselves? What are the challenges you have that you would like to see that the regulator either deals with, or that you don't want the regulatory involvement in?
Yeah. No, look, I mean, we've had very good conversations with the Securities and Exchange Commission on this, and I think we're getting very much on the same page in terms of what needs to be done. In fact, we had a conversation earlier this week where we discussed the importance of financial literacy, and the SEC as well is going to make some investments in that. We have discussed some of the issues around market opening, circuit breakers, some of the microstructure issues in the market. So we will hopefully face.
Those were technical, is it, or is it because due to regulatory?
Yeah, so those are
requirements?
regulatory aspects, right?
Okay.
So our circuit breakers that were triggered on Monday, for example, were a regulatory request. So we discussed the pros and cons of some of those, how to recalibrate some of those. So, you know, there is very good and healthy dialogue. I think there is good understanding of the repercussions and how to potentially anticipate some of the unintended consequences. Now remember, this is not something we've seen before, so it is very important for us to be a little balanced about what needs to be done and what unintended consequences can come out of it. So I think we've got to maintain the dialogue with regulators to continue.
Finally, does this mean we are looking at a robust growth in capital market and positive growth in our markets compared to the rest of the world, where they've recovered? They've gone through their shocks, but they've recovered by now. But
yeah, so if you look at a lot of the Asian markets on average, and these are markets that did not shut down at any point, from March 20th, where we shut down, most of those markets are up in the double digits, in the teens, percentage-wise. So we are up 4.5% from the bottoms of Tuesday. So I think it's a good trend. We've had 3 days when the markets did go up, and I do believe that there will be a recognition of the cheap valuations. In the longer term, clearly, I think there are 2 or 3 things that we need to think about. One is how well we manage the COVID situation. Secondly, macroeconomic growth, because that ultimately drives earnings of corporates. And also, from a foreign investor standpoint, the currency stability, because they obviously don't want very large depreciation in their investments.
certainly, thank you, Dumith, for your time here at our studios.